have a stacked panel coming out to share their expertise. Taras, you here? All right. I'm going to read out Taras again. He's been up here once before, but Taras Kulik is Core Scientific's Senior Vice President of Growth. Taras led corporate development at Horizon Trust Company and served as Chief Operating Officer of Alta Phi Sigma. Taras was CEO of Squire Mining. Prior to his appointment to Squire, Taras was CEO of a family office's subsidiary engaged in digital asset mining, deploying over $200 million in capital during his tenure. Give a big round of applause for Taras. Taras, come on up, man. Next up, we have Patrick Guerriero. Patrick is the Director of Miner Finance at BlockFi. Prior to joining BlockFi, he spent 6 years in a long-short hedge fund where he was Director of Research. Patrick has led trading and investment strategies in industries such as transportation, agriculture, and power. His career started trading physical commodities for Gillette Global Group. Patrick, come on up, man.
The dramatic effect.
Next up, we got Andrew Benson. Andrew is the co-founder of River Financial. In his role, he brings his expertise in operational strategy, information security, and risk management to River, where he oversees mining, operational scalability, banking relations, and capital markets. Andrew, come on. Is that you, Andrew? Swooping up, man. You got to do your walk on. Come on, man. Give this guy a round of applause.
Hey.
Next up, we got Max Berg. Max is venture capital attorney that has turned his attention towards crypto and mining, specifically focusing on deal flow. He is familiar with all stages of venture financing and private alternative investments. His legal background helps Arthur structure deals, effectively helping the company scale towards public listing. Come on up, Max. Next up, we got Ruda Pellini. Ruda is a software engineer and former first lieutenant from the Army. Ruda has been in Bitcoin since 2015 and is a best-selling author in Brazil with the book O Futuro de Dinero, published in February of 2020 with over 25,000 copies sold. He now supports his company in its venture capital rounds and connecting suppliers and new partners to lead the business to new countries and continents.
Yes, sir.
Welcome to the stage, man.
Thank you,
Appreciate
sir.
it. Yeah, round of applause. Let's go, guys. Last up, we got Francis Corvino. Francis, why don't you come up here right now real quick?
There's two more.
A lot of the speakers on this panel were added at the very last second, so I'll give Francis the quick opportunity to introduce himself and tell you a little bit about what he does. Francis, welcome up, buddy.
Thank you very much.
Appreciate it,
I'm Francis. I work at Anchorage. I do miner financing. My last name's Corvino, and I'll stick to that.
There's one more guy, by the way.
There's another Patrick. Patrick Zielbauer. Patrick joined BlockFills after nearly 2 decades in the future brokerage and trading space. At BlockFills, Patrick forms and manages relationships with some of his firm's most strategic partners and active market participants. These include hedge funds, exchanges, brokers, and most relevant here, miners. Welcome to the stage, man. Appreciate it. Yeah, of course.
All right. Thanks, everybody, for showing up. It's getting a bit late in the day, and I know we're all tired, but I think we've got some great content here. Collectively, we probably have some of the best companies in the space for equipment financing. So what you'll hear today is probably from the mouths of the right people to talk to if you're looking for hardware financing within the space. And so, you know, given the amount of capital that we require, you guys are the lifeblood to a lot of folks that wouldn't be able to grow as fast as they have been recently. So salute you for sure as a well-known, leveraged company for sure. But first question I have for you is, what are some of the issues your teams are seeing right now in this sector from a hardware financing perspective? Try to limit your response to about a minute or two just so that we can get through a bunch of questions. Patrick, you want to start off?
Yeah, sure. Thanks for that, Taras. I would say on our side of BlockFills, we started doing equipment-backed loans in August of 2020. And as more lenders have come into the space, we want to make sure that our interests are aligned with our clients. The last thing our space needs is a series of defaults that are caused by excessive pressure put on miners by lenders. So we want to make sure that we don't see predatory practices, and we want to make sure that our interests stay very closely aligned with those of our clients.
Thanks, Francis.
For us, I would say, first and foremost, an over-reliance on just a few hardware producers. We're pretty excited about the launch of kind of the Intel chip. We're hoping that'll be the starting gun for there to be just a lot more players in the space. So that's something we're really excited about for 2022, 2023, more hardware manufacturers.
Yeah, definitely. So basically, we are in the seller's market. So the miners, it's hard to find miners and it's hard to finance miners. So basically, considering the whole picture, I believe that right now, the investors are starting to see miners and Bitcoin mining as an adventure. Like today, they just launched an ETF for miners. So I believe this is...
Valkyrie?
Yeah.
Yep.
So when the investors are coming in, and new companies are starting to finance miners and everything. So we start mining in 2017. Other days, other times, at that point, you can't find financing. So right now you can. So we have 3, 4, 5 companies offering good deals. And so I believe that in 2 or 3 years, so this, like this event, right? So right now this is the largest event for the largest US miner state. And right now we have 1,000 attendees. So in 2 or 3 years from now, I believe that we have 10,000 attendees. As Bitcoin conferences from 2017, no one goes, and right now it's pumping up. Yeah.
Lots of interest in the space.
Yeah, just from a legal standpoint, to Patrick's point, there's the space is changing so fast, and some of the predatory, seemingly predatory practices that you're seeing from early on that started, and not to say that there's malice involved, but it's a seller's market, and so from a legal perspective, when you're looking at all these documents, you're looking at closing these transactions. I represent buyers most of the time, and so trying to push back on the financiers, right, is really has been an uphill battle. But I think that the market is actually equalizing a bit and actually becoming a bit more of a fair deal space, which is something that happens anytime a market matures. But that's really the main thing that I've been seeing from the transactions that I've been on.
So for River Financial or River.com, our business, for those of you who don't know, is a retail brokerage platform. We recently got into mining. So we're selling mining to retail investors, typically high net worth individuals. The biggest challenge I think we have that our finance team is working on pretty closely is the fact that we need to sync up the payment terms that our clients have with us with the payment terms that we have with manufacturers and brokers of ASICs on the back end. This is also a challenge, I would say, on the relationships that we have with co-location facilities where capital upfront may be required, and we're basically financing that so we don't have to pass those terms off to our clients. And this mismatch is both an opportunity and a challenge in the retail mining space.
Yeah, so I think some of the issues that the industry had faced prior, environmental concerns that Taras, you and the Bitcoin Mining Council have done a great job at sort of thwarting. More recently, we see a lot of geopolitical headlines.
Yeah.
I think that with every issue, you have an opportunity. I think it presents a tremendous opportunity for miners to come to the United States, for U.S. mining to grow, and that's just not U.S., North America as well. And frankly, we want to be a part of it, and we want to help, secure the network.
It's great to hear. I mean, you see the amount of capital flowing into the space. Do you guys stay up at night worrying about traditional TradFi equipment financing folks coming in? I mean, coming in with their massive funds and squeezing compression margin. Does that keep you guys up at night?
Usually, you can go?
Yeah, I mean, frankly, a lot of things keep me up at night.
Yeah.
Yeah, frankly.
Usually that's, in a different setting when I talk about that. But no, we see a lot of issues in that, TradFi. However, it's something that is just going to help the industry down the road.
Makes sense.
For River Financial's business, we would love to see traditional financial institutions come into the space with large balance sheets and recognize Bitcoin mining as collateral and a business that has long-term upside and potential. I hope to see interest rates for this industry go down over time. And as businesses become more operationally excellent in different facets, I think we'll continue to see institutional capital attracted to the space.
Yeah, just on that point, actually, it doesn't keep me up at night. I actually think that, echoing that, I think it's a very good thing when you have big money, institutional money coming into the space. And not just in finance and traditional investment, but I mean, even when you're talking about lending on mortgages, right, and being able to collateralize any sort of Bitcoin or crypto holding that you have when you're trying to apply for a mortgage, right, instead of having to pull it out of, liquidate, pull it out of your account, have it sit in a checking account for 3 months before they can even look at it. I think that there's the more traditional institutional players that you have in the space, really just the more sophisticated and more broad-based this becomes, and I think that is just that's rising tides for everyone.
Makes sense.
Yeah, I agree with those guys. So basically, I'm just waiting for when those guys are coming and when there's money coming flow. Basically, it's a matter of time. I believe that the narrative, as the narrative of Bitcoin, like Bitcoin 2017 was the best thing, the worst thing. The governments, U.S. will ban Bitcoin and everything. China banned Bitcoin mining 7 times. So when you told to a child, don't do this 7 times, so basically she can do whatever she wants to do. Okay, so basically don't worth it. Né? So when we are saying all of these political issues, I believe that right now is a narrative. So Bitcoin mining is a bad narrative, is still like worse for the environment and everything, but this is changing, and I believe that in 1 or 2 years we won't see. So miners will be like the good thing. So all the energy operations, all the energy producers, must have mining operations in their plants because otherwise they won't be competitive.
Yeah, I would say the things that keep me up at night are not the things that I just expect to happen. We believe long term that large institutional capital is going to be coming into crypto. Being kind of the first national bank in crypto, we are largely we're sort of the beginning of that. We have a custody solution, we have a trading solution, we have a lending platform. We have a lot of these services already. So we're actually excited to see kind of some more sophisticated, kind of older players get involved, but we believe we'll just continue to be the most savvy.
Yeah, and also, I would say if something keeps me up at night at BlockFills, we're primarily a trading firm, but we have a large miner financing division as well. Execution risk is a real big issue in our space because we have things like hardware. We're building, people are biting off these huge deals and data center projects, and it's an issue. One of the things we're doing to combat that, I think, intelligently, is looking at existing operations that have great, running scalable operations where we could go in and mitigate some of the execution risk by offering to recapitalize businesses that are already rocking and rolling. So, we execution risk is a big issue for us, but it's our job to, figure out a way to deal with that and still run our business. So that's been a shift of focus for us.
No, that's great insight. We've been hearing a lot about air-cooled versus immersion versus hydro. When you guys are looking at deals and you would have, apples to apples, perfectly identical deal, but it's air-cooled or immersion, how do you guys look at that?
I would say at BlockFills, we just want to make sure that our clients, the miners, understand the amount of time it's going to take them to ROI. But obviously, BlockFills is based in Chicago. I live in Texas. Texas is where it's at for mining. I'd like to represent the Texas Blockchain Council. They're doing a great job down here. We think it's going to be a necessity down here. We're involved in that space as well. We would prefer to deal with a savvy miner who understands liquid immersion, can bear the cost, and still ROI.
Nice.
So I would say that question is a little bit more tiered than just asking, is immersion good? Yes, we like immersion, right? Like the chances of the whole thing burning down if it's an immersion is lower, right? But at the same time, that's not all you're asking. You're also asking, can I overclock? That's the next question. So that's a little bit more of a difficult question.
There's a bunch of different factors to consider.
Yeah, absolutely. So I mean, really, ultimately, when you're financing a Bitcoin miner, that's an 18-month plus relationship. So you got to get to know these folks really, really well. So when it comes to immersion, when it comes to overclocking, and when it comes to many of these other factors, you just have to make sure that the person that you're in that relationship with understands these risks. And once we've determined that they do, we trust the people that we're doing business with. Otherwise, we wouldn't be doing business with them.
Yeah. So basically, I'm from Brazil. You can know by my accent. And so our tech team is in Brazil. Our mining operation is here in the US. So we've been developing like our own cooling technology over there. So it's cheaper than producing in the US. We have good manufacturing over there. So we have a lot of big industries supporting us over there. So our plan is to starting to shipping those technologies for the US. And so we are starting right now and at the Q1. So basically we're looking for both immersion cooling systems, producing and developing by our tech team is over there, and as well as air cooling systems.
Yeah, my answer is far more transactional. It's not. I mean, I'm not technical, first of all, so I leave the technical strategy to our tech team. But really, it comes down to two things. It's the availability and the capex upfront, and those two things really drive, from a deal perspective, a lot of what we can do. And we're from the same company from Arthur, and we're a scaling company right now. We're not a tiny miner, but we're not running a gig. And so really availability and capex and what the terms are available at the time is really what drives that from the deals that I'm doing.
For River Financial, we only do air cooling at this point in time. I'm very bullish on immersion cooling in the long term. There are some limitations to it, though, just operationally. If you're looking to scale quickly, there's some challenges with that. Finding facilities that can do this at the scale that we would require is also a little bit of a challenge that I expect would not be a challenge in 2, 3, 4 years from now. There's also concerns and considerations from a financing perspective, especially if you're considering a procedure that would potentially void the warranty on the device. That has material implications for what we would represent to a client when they own a machine, and they need to be aware of those risks should we offer that at a later point. But don't offer it right now. I'm very bullish on it, though, for the long term.
Yeah, I think we have a similar view at BlockFi in the sense that disruptive technology is certainly a good thing. We are financiers. There are a lot of great engineers and technicians here that could probably tell you a lot more about immersion cooling than I can. And that's also a good thing. But to the extent that we only do air cooled and we only do immersion, we're open for business. We're looking to do as many deals with trusted partners that are feasible from a returns perspective as possible.
Got it. No, I really appreciate the insight on that. Given the global supply chain risk, how do you guys view delivery risk issues?
It's certainly a risk, but it's a risk that we are willing to take. To a certain extent, like anything. We have a responsibility to our investors, to our borrowers, to all stakeholders of BlockFi to take risks that help support the network in general. We have good relationships with manufacturers. Obviously, we want to have better relationships with a broader range, and I think that'll come in time.
For River, we procure machines quite regularly, so we are essentially dollar cost averaging into ASICs. This is allowing us to spread out our procurements through a handful of different brokers and vendors, which one of the questions we ask is, where are the machines located? And if the machines are located in the United States, that's something that we view as a lot less risky because we don't have to worry about clearing customs. We don't have to worry about delays from the manufacturer in China or Malaysia or Taiwan. This makes it a lot easier for us to understand the risk landscape. And then there are other things that we do to hedge that as well in terms of keeping enough Bitcoin on our balance sheet so that if we are in a short position of miner inventory and there's some price exposure there, we're just sufficiently hedged. And after that as well, it's about managing client expectations and being very transparent with them about possible delays.
Yeah.
I'll let Ruda expand on some of this for us, but the one thing that we've been doing recently is we're talking to large electrical engineering firms globally, and if we have sites that are outside the U.S., we literally just send an NDA and we send our spec and we say, can you build it, in your country, so that you can just get on a truck. So that's one thing that we've been doing as a company.
Yeah, and like in Brazil, you have a lot of energy available, so we have a few problems by importing those equipments. You have taxes, you have local governments of third world countries, so it's not easier. But definitely, it's not. So it's a problem that every miner will face it in some point. And actually, right now, every industry is facing it. So it's not a risk for businesses. It's part of the deal, part of working every day. So is that? So I would say 2 years without coming to the US because of COVID and everything. So that's where we are right now. So
makes sense.
For me, to start, I mean, I just assume it'll be late to
Yeah.
kind of save myself.
Exactly.
Like, I'm surprised no one else has said that.
Exactly, exactly.
It's built into every deal.
Yeah, absolutely, exactly. But that being said, we also do work with some really great broker partners. They'll send us serialized lists. They'll send us videos of the equipment. We really appreciate it. So to all the brokers out there, when you guys do that means the world to us. So thanks.
Yeah, so it's funny. Everybody I talk to has the best relationship with the manufacturer. You can't all have the best relationship. But, listen, I mean, obviously this is a risk, as Patrick said, that we all have to take to get into this space. If you're a miner, you got to work with someone who has delivered in the past. It's your best shot. I don't know if anybody's trying to ship anything out of Hong Kong right now. I mean, it's a mess. BlockFills, we tend to go to our clients opportunistically when we have pockets of equipment that become available. That's why we like to talk to people and understand where they're at, because if we come across something opportunistic, we may have a chance to procure that, for a client. So, it's a risk we're all taking. There's really no way to mitigate it fully, but
Patience.
you'd have to, yeah, you want to work with. If you're looking to import, you have to work with a firm who has delivered in the past. I mean, that's the best way to mitigate your risk, assuming you want to import it all.
No, that all makes sense. Next question to the panel is used units and warranty. How do you guys look at used units, warranty value? Does that discount the premium to the coupon that you're charging clients? What are your thoughts on it? Does it change the structure?
Yeah, I think it certainly changes the structure a little bit. Every deal is, however, really customized to the client. So I think, we look at are the two counterparties good custodians of assets in general? In our experiences, the answer has been yes, which has certainly helped facilitate deals.
For River, because we're selling miners to retail investors, we optimize for minimizing variance from one client to another in terms of the experience that they get. At this point, we don't really sell used machines to investors on River, but it's something I wouldn't rule out. I think one of the most difficult things with used machines is there's no Carfax equivalent for miners, and knowing exactly what's been done to it, the history, what OEM parts have been swapped out for, more generic parts that may be, not as good. Those are things that make that market a little more opaque and break some of the homogeneous nature of miners of the same model, to the extent that miners of the same model are homogeneous.
New old stock doesn't really exist in this market, but we certainly have a preference for as a miner buying new units, and we basically have our own strategy for using older gen, right, and filtering them through our high production, right, overclocking things, and then we move them basically down, as they age and they some of them break, whatever else. We move them down to kind of our lab, right, our R&D lab, and we are testing some immersion, right, some immersion solutions, or different ways to set things up that our tech team is always doing. So we really prefer to bring in new units, and then we actually have our own strategy for the used units as they age. That's kind of how we view it.
Yeah, basically what we've been trying to do is, for reducing petahash costs, is to make a portfolio of hardware, used and new ones, so we can reduce, so we can be most cost effective, because the both ways you can achieve the goal is how much fuel you have to take so you can use a Ferrari or a Porsche, but depends how much fuel you want to use it for achieve the destination. Okay, so basically that's what we've been trying to do. We definitely prefer new ones or new generations at least, but we are trying to compose this portfolio using algorithms and trying to use quant models to understand this.
Makes sense.
I think I'll be in the minority here and say that I actually love it. When you have a well-capitalized miner, we're institutional only. And once again, this is a relationship-driven business. So if you have someone who has executed on fixing equipment with, many, many times, and they come to you and they say, hey, I got a really good deal here, I want to go get this. We like that scrappy mentality to go out and get that. So we want to support that as best we can. Generally speaking, once again, this needs to be a really well-capitalized institutional miner, and we do prefer to do that type of deal where the miner is actually borrowing Bitcoin. Really actually like used equipment, really more for what it represents than anything else.
Yeah, I would say, we're not out to go out and procure used equipment for our mining clients, but if somebody, going back to my comment earlier, has a a well-oiled machine running on used equipment and is looking to recapitalize so they can, build an addition, basically. That's our way of supporting the community without necessarily exposing them to, the delivery risks we discussed earlier.
Oh, that's awesome. So I had a couple people come up to me earlier asking, how can I finance my facility? How can I finance my units? If you were to have a perfect client come up to you for a financing deal, what would they have? How would they structure themselves? How would they be prepared to have that conversation with you?
I could start with that. At BlockFills, we, again, have a trading slant. So we generally appreciate when a client comes to us with an understanding that it may be in their best interest to trade away some upside for some downside protection. So we are all commodities guys. The more of these oil and gas PE guys that come into the space that have this mentality of being willing to trade away some upside in exchange for smoothing out the volatility of their balance sheet, we love that mentality. We want to work with those groups. We want to work with groups who are willing to mitigate risk, willing to trade with us. We have a mining pool they can participate in. There's a number of different verticals where we can support that service. So we're looking for groups who share this idea that some downside risk mitigation is generally appropriate, and that's who we want to talk to.
For us, I think it would probably depend who on our team you ask. But if you're asking me, and I'm the one up here, I would say a miner who wants to innovate and really has grand ambitions. I am excited to see this space evolve over the next 50 years and next 100 years. Getting started with Bitcoin miners who have ambitions to do things which are unique, push the industry along. That's what I find exciting. That's what makes me want to get up for work every morning. So those are definitely my favorite miners to work with.
Yeah, so definitely we prefer partners who have aligned with us. So I like what you said. Basically, what we've been trying to do is the same thing that the oil industry did in the 80s. So protecting from downside risk and so reinvesting to grow in their company. This is basically if you have, this has been proven like for a lot of econometric studies for the 80s and oil industry. So basically, if you can reinvest in your company and you're producing a commodity, so if you can reinvest and produce more, it doesn't make sense you have this asset in your balance sheet and having this better risk, So you won't have this beta exposure if you're reinvesting. So the only reason that I see to carry this risk in the balance sheet is if I cannot improve my operation and continue to grow. That's my point.
Also, as a client, I mean, we get creative on the corporate structuring side. And I know this is legal and boring, but I mean, we are actively taking on venture investment, and then we also do, mining as a service. We host for and run SPVs with an optional conversion to convert back up to our, main mining entity. And so we de-risk, and we show when we tell that, we bring that structure to financiers. They appreciate some of the de-risking on the capital structure side and the corporate structure side.
So River Financial is purely retail facing, so we don't offer bespoke financing deals. Everything is quite standardized, which makes it a little bit easier. And the way we structure this is it's just modifying the payment terms that clients have with us to spread out the payments over multiple months leading up to and through the deployment date. And one of the things that we look for as well, and especially if a client wants to come in and do some larger size with us, would be making sure that they've got collateral in their River account. So Bitcoin's in our view, the purest form of collateral that you could have. So that's something that we look at very favorably.
Makes sense.
Yeah, so I think, one thing at BlockFi is we're able to get a little creative with a lot of the structuring, and we can service miners who have an appetite for Bitcoin-denominated financing, USD-denominated financing, machines hashing in the US, machines hashing in Europe, future deliveries. So I'd love to answer the question in terms of what the perfect client looks like, but unfortunately, or maybe fortunately, we feel that working with a diverse set of clients is really essential to our business.
Well, that's a very good capital markets response on that one. Diversification is key, especially across our clients. I got one last question, then we'll open it up to the audience. I think there's microphones available over there and over there. Given we're in a value game with financing, how does your team look at long-term hash rate to be able to come up with a valuation and internal risk models for financing and the deals you're doing?
Yeah, so I think if you
Give me a number of exahash by end of the year.
I think if you roll back a little bit in July or June, July 2021, a lot of the miners that I was speaking with, I don't think they would have predicted that hash rate came back to 200 or whatever it was this morning, 198 on hash rate index this morning as quickly as it did. We do think that hash rate's going to grow rather consistently here throughout the year. But again, we have a responsibility to be ready for all sorts of scenarios. So, we have a bear case, we have a phase case, we have a bull case. And with that, I'm going to pass it over to Andrew.
End of 2022.
I think as we see larger institutions get into the space, they've got the balance sheet to absorb a longer, prolonged bear market. So even despite that, I think we'll continue to see hash rate grow. So that's certainly one input. I think the other question is, what is the long-term outlook of on-chain fees? Because if you're running a discounted cash flow model into the future, and we don't see Bitcoin transaction fees going up significantly, that will have an impact on the viability of mining as a business. So I would say that that's another big input in addition to hash rate. But I think 375 exahash by the end of the year.
My man.
Yeah, as a miner, we're just trying to secure as much hash rate as possible, as quickly as possible right now. And that's really, that's the name of the game, is just speed to market for us.
Yeah, so basically there are two things. First, you are in shortage with every chips, and so basically every industry are facing these problems. So we won't believe that will be growing so fast as we expected like before, because no one was expecting this shortage of chips or semiconductors in the entire world. So the mining industry is a tiny, tiny, tiny piece of semiconductors. So basically, all the mining industry is in the end of the line. So it will take more time to achieve like 300 or 400 exahashes, I believe so. But the second thing that we've been studying and working in a few is so we are in a commodity industry, right?
Yep.
So the only way that a commodity industry can grow is having futures and derivatives. So we must have like a future contract for a hash rate, like traditional ones doing in regular stock markets, like CBOA or something like this, CBOE. Yeah. So basically, when this comes for the market, we'll see the mining industry growing as fast as we can, because we'll be able to hedge like the entire. Basically, you already can hedge the price, the Bitcoin price. You can hedge the energy cost. So basically, you are hedging the cost and the price of your liquidation. So if you can hedge the hash rate, you're done. So basically, you create the perfect commodity industry. So the state of the art. That's what we've been looking for, trying to develop some things, talking to like exchanges and everything. So that's a goal.
Makes sense. So end of 2022?
Not going near that one.
250, 280.
250, 280?
Yeah.
That's it?
Yeah.
Okay. Fair enough.
Let's see.
All good, Francis?
So to the end of that, I won't go near an estimate. But there are a lot of moving pieces, obviously. So we're trying to take a look at all those moving pieces and make the best guess that we possibly can. But ultimately, anyone in this room is making a guess.
Sure.
I think that's reality. And some of those guesses are contingent on some other like really interesting things. Andrew, I think, brought up a really interesting point on fee revenue. That's definitely a wild card in there. But there's a lot of wild cards. So we're just doing our best to manage them.
Yeah, and I think the hash rate derivative thing is super interesting to BlockFills as well. I would say, are we going to get the price appreciation that coincides with all these machines coming online by the end of the year? I mean, that's really going to have a huge impact on this. I think we should always be prepared to see these machines come online, or see all this hosting finally come online and not get that price appreciation. I hope that does not happen, but if it does, that's obviously going to have a major impact, and it's something we just all want to be cognizant of.
Awesome. And no hash rate forecast.
I'm going to say let's go with 315, just to
315?
nicely in the middle.
315. All right.
Yeah.
My range is 350 to 400, but that's just
400? Fuck.
All right.
not a company perspective. It's my personal. Do we have any questions from the floor? We got one over there. I think the microphone's just over there. You want to walk over? Or you can yell it out. No, you can yell it out. I can hear you.
Speak from the diaphragm. Yeah. Right. All right. So I was just wondering,
So to paraphrase, if for those that may not have heard him, the audience question was, how do you guys do economic modeling on cost bases and break-even analysis? Bottom-up, top-down analysis, how do you guys look at it?
I could start with that. I mean, I would say, when we're engaged in the potential to finance a mining deal, they're the one actually bringing their calculation to us. So it's actually their job to figure this out. But what I will say is that most competent miners are coming to us with a very bearish case, a sort of middle case, and a very bullish case. And it is well within, most of the miners who are confident or really seeking to get a good financing deal from a firm like BlockFi's are going to lean very heavily on that bear case. And I'm going to leave the specifics to the bean counters on their team largely, but in their models. But we are approached usually with a series of cases, and we like to look at the weakest one when it comes to financing a deal for one of these enterprise level miners.
A lot of Excel. That's that's the reality of it. I can go into more detail. Say we have like a maximum hash rate we believe is possible, a minimum hash rate, a maximum price, minimum price. But at the end of the day, it is just a lot of Excel.
Yeah, basically we put, so almost 4 years, since 2017 we've been collecting data for networks, and we're trying to figure out projection using quant models to project the impact of hash rate and everything. So like China band wasn't in any model, anyone's model. For the cost? Yeah, so our average, so in our calculations, the average cost price for the entire network is something like 15,000, the average, considering the average price of energy. So considering the entire miners in the entire world. So each businesses have different cost structures, but this is basically the price that we believe that if Bitcoin achieves this price, the party is starting to empty,
Yeah, I mean, the Excel,
yeah.
I mean, it is a lot of Excel, like Patrick said. But the other side of this is, that factors into this is actually predictability, right, in that model. And the one major factor, well, I guess the one way that you can control for predictability is, on the energy side is really de-risking, and you pay a premium for de-risking when you secure energy prices far out, right? But that's hard because you're paying that premium, and you have to bake that into your model, and whether you're bearish or bullish on it, right? That's hitting your bottom line. So that's not a direct answer. It is Excel, but you are having to look forward here and try to stabilize your model in ways.
For us, Google Sheets, not Excel, but same concept. So we're looking at a bottom-up approach. The costs are very unique. We have retail clients who are coming onto our platform with varying costs of ASICs as well as the hosting costs that they pay. So we are looking at this more from the lens of at what price point for most clients does it become unprofitable, and what risks does that pose our business. So it's a little bit different in the sense that we're looking at more of a large group of counterparties and assuming different risk tolerances for different segments.
Yeah, I think my fellow panelists did a pretty good job of answering that question. But we've seen models anywhere from 15,000 to 29,000. But what we really hone in on at BlockFi is power. A lot of my structures there. Joe Chu, big power background. I had some power trading myself, so we really focus on the electricity side, and the hardware will move with the price of Bitcoin.
That makes sense. Thanks, guys. Another question from the audience. I think there's someone over here. Yep.
Question for BlockFi. I know there's a pending hearing before the Texas State Supreme Court on interest-bearing accounts. Money your account holders here in Texas. Any updates you provide on the regulatory front here in Texas?
So for the audience, if you haven't heard it, the question is, any updates on the regulatory front in Texas on interest-bearing accounts in relation to crypto entities?
When we know, you will know. It's we run a pretty transparent business. We're fully operational, and our clients are our number one priority. And the first time that we hear news about it, I'm sure a lot of you will, and I'm sure a lot of people in the audience have heard of the regulatory issues there. But we continue to work with regulators, and we've done so since the company was incepted. So.
And I'll follow on that question because that's a good point to bring up. What are your views on regulatory environments right now within your respective jurisdictions, USA, Brazil? Any thoughts where it's going, how it is right now, what your firm's doing, what your teams are doing? Any insight for the audience would be great.
Well, one thing I'll say is the Bitcoin miners got a lot of great press this past week with the freeze. Thanks to the TBC doing their work. Really fantastic press related to the miners being so willing to shut off and work with ERCOT in the middle of a freeze. I think that was a great step forward for the narrative in Texas.
Definitely.
So it's that was wonderful to see.
Yeah, so basically, I believe that the investors are coming in and the market will professionalize when you have regulations and when investors see that they won't lose money because some regulator just pass a bill that stops the operation in this country. So even in Brazil, we have the same things. So we have a project bill trying to regulate mining operations over there, but that's not possible because of the taxes. But okay, they are trying to. So here in the U.S. as well, as our mining operations is here, so we are basically understanding that it will be a good thing at the long term. So in the middle, we don't know what to expect in the short term, but definitely, I don't know, it's the regulator, so we have to accept, right? So this is the cost of doing business.
Yeah, so the known is better than the unknown, right?
Yeah.
And we can debate the substance of regulations forever, but just knowing the ecosystem and the environment that we're walking into is always going to be better than operating in the unknown.
Yeah.
Because I mean, that risk gets built in to every part of the financing process, the trade process, our operations, right? The costs go up for everyone when you have to account for risk.
I would say that the regulation's coming, but I don't believe the die has been cast on exactly what that regulation looks like yet. I think that the opportunity to define what that is going to be presented to this industry over the next 2 to 4 years. And with that, we are only U.S. hosting. We think that the U.S. is going to be quite favorable to it as long as we make the case. And we do diversify through multiple states to de-risk any state-specific regulation as it relates to Bitcoin mining. On that note as well, River Financial, as a platform that gets more people into Bitcoin mining, one of the ways that we look at this is if we can get more folks in this boat with us, that helps the industry as a whole. So if we can get politicians, regulators, and influential people in our society mining Bitcoin, they'll be in this boat with us and we'll have a shared destiny.
Or holding Bitcoin, like Ted Cruz, who bought his first Bitcoin from River Financial last week, if you guys didn't know. But what I'm hearing is some rules are better than no rules, but not too many rules, because then it'll really stifle growth and innovation in our respective jurisdictions, primarily here in the U.S., right?
Yeah.
Yeah, I mean, the last point on that, I mean, when you look at the global scale of China versus everybody else, too, the game theory is playing out pretty well in our favor. And the U.S. is poised to make some really, really, really strategic moves here to, a 100-year plan China. So Bitcoin could be a big part of that narrative.
Yeah, agreed. I mean, China shut down, Bitcoin shrugged, right? We've got one last question from the audience.
Thank you. When you're thinking about forecasting future network hash rate growth, do you view it as being dependent upon price appreciation as well? Is it like a linear relationship? How do you think about that? Or is it independent of price?
So yes, we consider the price appreciation because if Bitcoin prices increases, you have more money coming in because the margins will grow. But you have the semiconductors industry that this is a bottom line. So so I'm very bullish with this Intel launch. Basically, this will put competitors in the scene, and this is a good thing. So probably the network will be increased faster than I expected. But yeah, definitely the price appreciation is a very important thing because, of course, margins. So in a competitive market, when margins grow, you have more money coming in and more miners and everything. So margins reduce. Yeah.
And do you view it as having a linear relationship to price growth, or?
I'm sorry?
Does it have a linear relationship?
No, it's not linear.
Like direct correlation.
Yeah, no, it's not direct correlation. Yeah.
In what way do you view it? What kind of correlation is it?
So we can talk later.
Okay,
yeah.
That's fine. Thank you.
One last question, if you don't mind.
Sure. Yeah.
So one of the things I've heard was that there's a need for a decentralized community to try to act for the benefit of themselves. Tell me, what do you think needs to be improved for this asset class's trade representatives or industry council that will actually interact with the political groups here in the U.S. to help influence that regulatory framework?
I'll take the first one on that one.
What would you do different?
So Michael Saylor, who spoke earlier, has a fantastic saying. He said on the very first Bitcoin Mining Council presentation, is Bitcoin is decentralized, but we do not have to be disorganized. And so one of the things that we have to do as a sector is really work together. And one of the things the Bitcoin Mining Council has been doing is getting that voice by getting the data that's never been collected before. You know, the best data that was available about Bitcoin mining, specifically around electricity and sustainability metrics for power generation, was from Cambridge. Folks in the UK who, you know, did a bunch of statistical analysis and best guesses around what we're actually doing. That's now completely changed. We're going to have over 50% of the network for the Q1 results coming out in the next few months, based on the membership that we now have with the Bitcoin Mining Council. That doesn't mean that we're setting agendas or quotas or authoritarian rules around what Bitcoin mining should be. It's about getting the data so that the rest of the world knows what's actually going on. Political representation is massively important, and we're doing that with the Texas Blockchain Council. We're doing that with the Digital Chamber of Commerce across the United States. There's all sorts of trade organizations that are being spun up and properly funded through the right rules to make sure that our voices are heard. I mean, what happened with the infrastructure bill here in the US was candidly terrifying for a lot of the folks in the space, because you have people that have no idea what digital assets are trying to regulate them. That's not the case anymore. We're certainly mobilizing for that, raising funds to make sure that policy is set in a right way. Ted Cruz has been on the forefront of that. And we're going to see a lot more representation in DC and various state legislatures to make sure that things aren't happening without our consent and without our participation. That's my feedback on that.
And
one.
I could add just one thing as well about that. With respect to the way the TBC or the Texas Blockchain Council is handling this, I mean, we have groups coming together every month, and we have experts in these respective fields. It could be mining, it could be oil and gas. We have legal, experts. We have people in healthcare that are coming up with use cases for blockchain. I mean, people are donating their time and energy and resources to advancing this narrative locally here. It is a very meaningful effort. So I would love to see, that sort of effort replicated, in numerous ways across the rest of the U.S. But I think TBC is the best example of a great advocate.
Yeah, I'll add. So basically, it's about narrative, right? So we have to educate people, because a lot of people doesn't understand Bitcoin still, know Bitcoin but doesn't understand, and doesn't understand mining at least. So they have to understand what is mining, why Bitcoin only exists because of mining. So they're fully related. Bitcoin doesn't exist if you don't have mining, and mining doesn't exist if you don't have Bitcoin. So basically, people must understand this. So it's our work. Doing this, doing the presentations, speaking to people every day, every single day. So I wrote a book in Brazil. So we sold 25,000 copies and trying to spread the word. So this is a small job. Like every single day, trying to this is the big picture, Bitcoin. So here's the funny thing, like the Cambridge study, the TVs, the standby, so the electrodomestics devices, the electronic devices in your homes. When just standby, when they are standby, this consumes just in the US 1.8 times more energy than the entire Bitcoin network.
Right.
A year. Yeah. So, and no one is saying, oh, standby electronics devices are polluting the world and fucking up the world. I'm sorry for the English. I've lost them. Yeah. You don't see this happening, but it's a narrative, right? You say, hey. Remove your TV from the
wall.
The wall, yeah. So that's an issue, okay? This is a narrative stuff. So basically, we have to tell the people, hey, this is the data. Show them the truth, and that's it.
Anybody else? Final words? Well, really appreciate you guys coming down. Hopefully, you learned something about financing, but also a little bit about what's happening on the mobilization side here in the U.S. as well as globally.
Thank you, Josh.
Thank you. Thank you.
Thanks, everybody.